It has another condition under the Section 65 bis and Section 65 that I would like to recommend you to go back to the class of the taxation and to make the understanding. Okay. For the Section 65 number 3 about the valuation. The revaluation process under the financial accounting for the case that the asset shall not be overstated in the value because the subsequent time the asset may be devalued or increase of the value due to the character of the asset. When they revalue in the financial accounting, they will recognize as the income or the expense, or sometimes it will be recognized as other comprehensive equity item. So that will be according to the accounting standard. However, for the part of the asset which is revalued and recognized as the income or the expense, under the Section 65 bis number 3, all assets other than the stock interest that they revalue, they should be not recognized as the income because because the adjustment of the asset value is not treatable as a taxable profit. However, when they has actually sales in the accounting period that they sell, they will recognize the capital gain as the income by comparing with the historical cost that they purchased that kind of the asset. As same as with the opposite side of the devaluation. Under Section 65 number 13, the amount which is the asset other than the stock interest when they get the devaluation. This will not be the deductible expense too. If the asset is devalued in real case, the loss from selling the asset will be recognized as the expense in the accounting period that the asset actually sold out. For the stock interest, normally it should be recognized as the historical cost for the cost of the purchasing or cost of manufacturing under the costing methodology, where the inventory is devalued. The law allows to recognize the loss from valuation of the inventory at the market price in the computation of the net profit as the expense. By the way, under the financial accounting for consideration of the value at net realizable value, it will not be comparable to the market price because it is a different objective. So devaluation under the net realizable value of the financial accounting will not be treated as a expense in the calculation of the net profit. You can see that these three items, even the revaluation by increase the value of the asset or decrease of the valuation of the asset, and inventory is a kind of temporary difference because the loss or gain will be recognized as gain or loss on selling assets or inventory in the accounting period that when they get the actual sale.